Hello, and welcome to another update video about MATIC. So MATIC basically turned around where it needed to. We shared in the last video here this horizontal support line that could lead eventually to a head and shoulders. So it looks a bit like a neckline of a head and shoulders pattern. Support, or the neckline, is actually here around 77, 78 cents. So a break below that eventually could lead to the fulfillment here of this head and shoulders pattern. Basically a bit of a topping structure there. That could then eventually send us down into the support area. And then it is likely that the levels of 76 cents, 70 and 65 cents will be tested in this fourth wave before a fifth wave rally can occur. We're overall tracking here a structure that we would call a diagonal pattern. But we need 5 waves up. So far, we only have 3 waves up, and we have a wave 1, we have a wave 2, which bottomed in October, a potential third wave. And then this here is potentially the fourth wave pullback. And then as long as it's holding the 64, 65 cent level, it's the golden ratio of that level, we can expect, I think a fifth wave rally is a reasonable expectation, I should say. So it's just that below 64 cents, below that 61.8 retracement level, the wave 4 is too deep to be reliable, and it will not be invalidated, okay? That's the problem with these diagonals. They are not reliable, not so reliable like, for example, an impulse, but still, in many cases, it's in a wave 4, we see it holds the 61.8 retracement. Just means if it breaks below that, it's most likely not a diagonal. And below 64 cents, we would be watching for the 50 to 41 cent level or range to be tested in the wide wave count, which would be a different structure. It would look like an impulse to the downside and will not stop at 64 cents. Primarily, I'm watching this yellow structure, but really, and essentially that yellow structure is needed to get back into let's say, a lasting uptrend. So we need those 5 waves. As soon as we've got the 5 waves, then we are going to watch for the next 3 wave pullback. Probabilities are really only going to be high for the scenario that a lasting low has been established already after 5 waves up. Okay, at the moment, this could simply be an ABC structure and break down. But still, because of the overall sentiment in the crypto market, structures and so on, we are first of all tracking here and slightly leaning towards this diagonal pattern, which would be a bullish structure. But in the short term, it seems to be just following the wave count, the wave count that we shared in the last few videos, which was 5 waves down, okay? Or actually, no, 3 waves down, A wave down, B wave up, C wave down. The C wave was a 5 wave move, which again formed a larger A wave. Yeah? And then here, this B wave could get quite aggressive because B waves can actually overshoot, especially if the A wave, the A wave was a 3 wave move. So if I zoom in a little bit, you see that this A wave here is an A, B, C structure. That typically indicates that the B wave can be quite aggressive. It doesn't need to, but it would suggest a high B wave and then the C wave down, So important would be for a head and shoulders pattern, though, that we don't really get too close to that previous high at 98 cents and definitely not overshoot it. So ideally, it actually wouldn't get much higher than the 87, 88 cent level, but we'll see. What was the red line there? Let's just double check something. No, I take that out. So, the thing is, the move of the lows looks a bit like a bear flag, okay? A bit like a bear flag, a corrective price channel here in this B wave, maybe even a bit of a wedge pattern, but it resembles a little bit like, a bear flag, just a sort of corrective price channel. Let's see if it's going to adhere to that and follow that. But more important is actually the Elliott wave count, which suggests that, while wave 4 could already be finished, it wasn't really a very deep wave 4 that leaves the door open for lower. And also, again, the move up looks corrective and we've got the head and shoulders pattern. So, and a bit of a bear flag there. So let's see. I don't think that, what we can do is add the standard resistance area for the B wave, which is here. It's between 87.4 cents and 93.4 cents. This is the resistance area. Standard resistance, B waves can go above it if they really want to. But yeah, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. You can find additional content there about trading, Elliott wave, technical analysis, and much more. So yeah, thanks a lot for watching. Bye-bye.